Welcome to Options on the Open. My name is Larry Gaines and I have been a professional trader for over 25 years. This site is all about options, from day trading with options to teaching options strategies that work in any type of market. Trader Talk is a series of educational videos of some of my favorite trading stories, option strategies, and trades. Transcripts are available on the site. The first in this series is called Lightning in a Bottle. When I first started trading cargoes of foreign crude oil for Coastal Corporation in the 80s, I worked for two very intense characters, Oscar White, the founder of the company, and his right-hand man, Sam Wilson. They were legends in the oil trading community and were always stirring the pot to make things happen. It was a fun but nerve-wracking environment to work in, for they were constantly pushing the traders for better trades and bigger profits. Sam was a tough trader with a quick temper and even quicker wit, and at times he could be very funny. He always had a great trading story and some really funny one-liners. My favorite one-liner was, "This trade is like lightning in a bottle." We had just made a huge amount of money on a major long oil position, and he was so excited that he blurted out, "It's like lightning in a bottle, it's like lightning in a bottle." And he just went on and on and on with excitement over this trade. I vividly remember all the traders just rolling in laughter. Wow, what a great time. These memories are some of the memories that you're always trying to repeat as a trader. As a trader, you're always in a quest to make that perfect trade, or to capture that lightning in a bottle. But how elusive these can be. In this video, I'll show you an example of capturing that lightning in a bottle. During earnings season, there are always some great trading opportunities. As a trader, it can be a trading bonanza if you stay in tune to the market news regarding some of the major high beta companies that are due to report. Earnings can bring high volatility to stocks due to a miss in their earnings or better performance than what the market was expecting. It is these types of surprises that cause a stock to spike higher or lower, providing some great opportunities to make big profits in a very short period of time, or like I like to say, lightning in a bottle. There are two key elements to these types of trades. One, finding the stock with the potential for an earnings surprise, and two, structuring a trade that benefits from the earnings surprise and that will be structured in a way to define its risk and control that risk. Many traders will use a risk-reward ratio of 2 to 1 or 3 to 1. For example, you will be willing to risk losing $50 in order to make $150 per contract. This would be a 3 to 1 risk-reward ratio, and this would help you identify your risk and control that risk. In order to find trades, I will always usually check my weekly Barron's Financial periodical and Investor's Business Daily, which comes out every day. These two publications give you some great ideas from time to time. I'm also constantly monitoring and checking Fast Money, which is a daily financial TV show on CNBC that reviews the financial market's daily activity. Not long ago, a really great idea popped up on this show, which became lightning in a bottle.
After studying the charts for major support and resistance, I concluded that there was major downside support at 106, which was the low put in on June 29th. Extreme market support and resistance levels are usually always tested more than once, so I felt 106 was very strong in the short term. For a bit more downside cushion, I selected the 105 put for the short leg of this put ratio spread. Also keep in mind that this trade was put on for a very short-term move in the underlying stock of Amazon. So here's the trade. I bought the July 110 put, expiration date July 30th, 2010 at $1.47 per contract. For every put I bought, I sold two of the July 105 puts, same expiration, at 74 cents per contract, creating a 1-by-2 put ratio spread with no cost to me. Earnings were released after the close on July 22nd, and they were not received well. Amazon dropped post-market over $14 per share, and the next morning on the open it hit the low of the day at 105.80, and immediately it started to bounce. Chart support at 106 turned out to be very strong. As the markets tend to do, they overreact. This is a day trader's dream, a market overreaction on the open, and in this case an extreme sell-off in the Amazon stock, setting up the potential for a great counter-trend trade. In this case it was to buy Amazon, but first I needed to close out my put spread. I first sold to close the 110 July put at 305 per contract. I immediately bought to close the 105 put at 50 cents per contract. This trade had a 107% return on the $110 puts and over 32% return on the 105 puts. Not bad for a position held for less than 5 days. But I was not done yet with Amazon. To see the rest of this lightning in the bottle, please go to my website, optionsontheopen.com, and read the transcript for the finale of this trade, which had a daily profit potential of 251%. Thank you for joining me, and I hope to see you soon at optionsontheopen.com.